What's good, son? It's your boy Eon, and you already know me. Look, son, this is Forever Slow Stroking the Podcast, episode 91. Episode 91, god dang, son, yeah, we in here, though. But look, son, I really want to go over it. So there's a lot going on with the stock market, right, son? In addition to other markets, right, you have oil, gold, and other commodities. You know what I'm saying? Doing whatever they're doing, especially crypto, right, son? And I really want to talk to you and walk you through how to analyze some charts, right? And I will pull up a chart for those that are streaming, via Google, Spotify, and Apple. I will do my best to talk you through it because there are some points that can still be picked up verbally. So let's go ahead and get to a share screen, and I'm going to clear this. Let's see. All right, yeah, let's do that. All right, so this is Home Depot, right? Home Depot. I'm looking at a daily chart on Home Depot for those that aren't too familiar with TradingView. So this is like I said, this is a daily chart. It shows it up here on the top left hand corner. It'll show you the ticker symbol with the company name as well as the chart, time interval that you're looking at. You could use an hour, 4 hour, daily, 3 day, weekly, monthly, 2 hour, whichever one you decide you can use, right? It's not really set in stone. You could customize it. And me, I have the TradingView Pro, I believe. So that makes it different as well. So first things first, I really want to just talk to you about, number one, I'm going to go over support and resistance. Then, I'm going to go over some trends. And then I'm going to go over some mindset tools that can help you with, why support is support, why resistance is resistance, right? So not just telling you that, oh, this is resistance, this is support. I'm going to tell you why it is, right? And how to actively, identify these for your trades. So let's go ahead and get into it, right? So we're going to look at Home Depot. Home Depot, they actually have their earnings being reported pretty soon, right? May 17th. I'm actually looking forward to that. I think Home Depot will be valid. It should take off, fan-freaking-tastic, even with the market pulling back, right? So as the market pulls back, you are being presented with additional buying opportunities. So you need to be equipped to know when a good buying opportunity is in your face, right, son? So first things first, let's look at, some price action, and we're going to spot a support. So here, I'm actually going to talk to you about more than just support, but here's support, right? A lot of people typically will say, oh, this is support right here because it touched a line, more than 2 times, right? 1, 2, 3. We have 3 touches on the line, 4, 5, 6, 7. We have 7, 8, interactions with this line right here, right? With this price action line. And for resistance, somebody may say, oh, well, this could be resistance because price action, around this price, and this price got beat down. Or somebody may say, oh, up here, because this is like a double top, right? So whichever one you decide to use is up to you. But let me tell you how I identify and how I utilize my support and resistance, right? So first things first, I look for areas of excitement. When you are trading and you're trying to identify the support and you're trying to identify the resistance, you really want to look for areas where price action couldn't exist, right? So here, price action really couldn't exist. Price action couldn't exist. Price action couldn't exist. Price action couldn't exist, right? And, in addition here, right? Oh, let me redo that. In addition here. So when I'm saying price action could not exist, I'm saying that the prices were so attractive to people who had money that it did not stay there for more than, a day or more than, an entire time interval. So if I'm using the hourly, if this was the hourly, it didn't stay there for more than an hour. If this was the daily, it didn't stay there for more than a day, right? Price action was so good. Prices were so low that people said, wow, this is a great discount and I will buy it, right? And likewise, for resistance, we could do the same thing, right? So resistance here, we'd be like, wow, prices were so high right there. I had no choice but to sell it. But I couldn't miss up on that profit. Here, same thing. I couldn't miss out on that profit. Here, I couldn't miss out on that profit. I couldn't miss out on that profit, right? I couldn't miss out on that profit right there. And then I couldn't miss out on this profit right here, right? Prices were so high that the profit was so good that, son, if I would have stayed in, I would have just been greedy, right? And I would have lost a lot of money for being greedy. You know, that's how I identify support and resistance. Mind you, if you want to just have it as one line, of course you're going to draw something relevant, right? You're going to draw something around for resistance. You're going to draw something maybe. Well, let me be reasonable. Let me see. Maybe around here, right? Because prices broke out of this area, but it didn't really beat this area, right? And likewise over here. Prices did come lower than this area, but it didn't really break out under this area and stay under that area. So this is where I would draw my support and resistance. As far as a trade, right? After you have identified your support and your resistance, what do you do next? Next, you go straight forward and say, look, if I understand that price action up here has an excitement to sell and price action down here has an excitement to buy, or not has, but creates an excitement to sell or creates an excitement to buy, why am I not buying the excitement and selling the excitement, right, son? So these are basic trades, son. I could easily buy anywhere here. So I can easily buy, let me actually get this tool. So I can buy anywhere in this area. And I can sell anywhere in this area. So I would just say this isn't going to look right, but buy. All right, so that's a buy. Oh, wait, no, I'm lying. This is a sell, and this is a buy. So that looks terrible. All right, so this is a buy, right? And this is a sell. When I get to this area, I want to look to buy, right? Even if it's falling, I know where it's going to fall to around this price, right? Likewise, same thing happens over here. Let's just extend this out. Oh, that's bad. Okay. Hold on, wait. Let me actually get my mouse. All right, so let's extend this out. So even if I buy it in this area, right, I still know where price action should be headed. Mind you, now we're going to go into some trends, right? So what do you notice? Let's clear this. Let's clear this, right? So what do you notice in here, and here? These highs are getting lower. What do you notice here, and here? Now we're just gonna focus on these on this area right here, right? Oh crap! All right, we're just gonna focus on this area right here. What do you notice in this area? This high is getting lower, and this low is getting lower. That's called a downtrend. With respect, this low is getting higher. These lows are higher, and these highs are higher. So that's considered to be an uptrend. So an uptrend typically will take you like this, right? Uptrend typically looks like this, where price action is bouncing between support and resistance, on a diagonal setup. And same with this downtrend. This is a really tight downtrend, but if I was to just draw overall, you still see the downplay in price action. It's a slight downtrend, but you still see the downplay in price action. So price action is bouncing between support and resistance on a diagonal move in a downward direction. So that's considered a down. This is a downtrend. So I'm gonna label that DT, and this is an uptrend, UT. So the downtrend, the way to play the downtrend, if the market is overall selling, don't try to buy the market, right? You want to wait for chances to sell because that's where you're going to see the most profit the fastest, right, son? If you try to buy this, it's going to happen slow. You're getting a lot of pullback, especially if you're playing options. Your pullback is going to wipe out your contracts because you're going to have a theta kicking in. Then your delta is going to start getting lower. And that's not something that you want, right? You probably still make money in the long run, but your contract is going to get beat up. But if I wait here and I start buying puts, then automatically there's less pullback. So I'm just making money all the way down. And the money's quicker. It's more excitement in that bread, right? My contracts aren't getting beat up. And it looks better, right? If you're playing on the Forex side, this applies for Forex too. And crypto, you could use the same methods, right? That is how you properly trade this downtrend, right? Likewise, same here. You get to this area. Say, wow, okay, price action can't hold here. Oh, we got a pullback. Bet. Let's buy this. Oh, the pullback came back lower than this. All right, we're going to buy this too. And sure enough, immediately, within 1 day, you've made about 80%. 80% of this upward move you made, that's valid, right, son? Pull back again. All right, cool. Prices stopped. Where did we go? We broke this area right here. Cool. We're going down. I'll sell that too. Once we get back to the area where prices look excited, let me get out. You get rid of your sell and don't buy. You get rid of your sell. And then you wait and see what happens next. Okay, now the markets, now we're getting to an area where, markets are no longer getting lower. They're getting higher. My highs are getting higher, right? It's like, I mean, my lows are getting higher. Why are my lows getting higher? And your lows are getting higher because now we're creating an uptrend, right? We're creating this UT, this uptrend. That's why your lows are getting higher, right? So now, instead of selling the market, you want to start buying the market. Okay, I'll buy it when it gets here. Cool. It's easier to buy because now prices are willing to go up without as much pullback. Cool. Buy that, break out, and take my profit. Oh, it came back to the same price? Cool. Buy it again. Nice breakout, take the profit. Buy it again. Here, you probably take a little loss. Not take a loss, but here you probably will wait. But, I mean, overall, you should be taking your profit around 20-50%, right? You should be taking profit in general. So that is how you use the uptrend and the downtrend for trading. Now, let me clear this out. So, let's go back, right? And finally, I want to tell you about this thing called accumulation. Accumulation is very important for people who are trading because this can help you to identify when large money is loading up a position. So here in accumulation, it'll look like consolidation, right? Accumulation looks much like consolidation, right? So here we see prices consolidating. Overall, it's consolidating, but the way I broke it down, we had a downtrend and an uptrend, but prices are, overall consolidating, right? we get a probe down here. And with accumulation, price will, what is this called? Consolidate. Prices will consolidate for, a good amount of time, right? So here our consolidation, occurred from August 2020 to about March 2021. So that was a good amount of time, right? So our accumulation was in effect. We get a probe down here. Prices got so excited, it just couldn't stay. So what happened? People bought this up. People who have been buying all of this, people who've been buying here, all the lows, whoever's been buying all the lows finally said, bet, I see this, I want this, because this is better than any other price I bought this security at. So I'm going to buy this low and build out my final position and buy this low. And when they buy this probe, the market goes crazy, because now once we get back into the trend, once we get back into the consolidation area, people are, oh, we're back at support. Let me buy it so that we can run to resistance. And now that gets more buyers. As you can see, the candlesticks start getting larger, because now there's more volume, there's more participation in the market. So that is how your accumulation is in effect. And then when we get a breakout, you see prices break above your resistance and hold. Prices are holding above resistance. So we're not pulling back anymore. We're holding above resistance. And that is how you use the accumulation phase to profit. And that is how, in addition, that's how you use your consolidation to trade up as well as trading down. So buying calls, buying puts, buying shares, selling shares, shorting, buying on the forex side, selling on the forex side. That's how you utilize all these, actions, so that way you can be profitable and make money. I think that's pretty much all that I want to talk about. I know the market is pulling back right now. If I pull up my SPY chart, it probably look crazy to y'all, but let me get this right. Let me reset. Can I do that? All right, let me reset my chart. Yeah, SPY looks crazy right now, right? So I know the market's pulling back, but because I understand price action a little bit, prices were very excited here. I said, let me wait till prices pull back to this level or this level, and I'm gonna probably buy that, because prices were so excited that it had no choice but to go back up. In addition, I know that there's a gap right here on SPY, so I'm gonna watch that too. And then we're gonna play SPY up. So that's really what I'm looking at, and that's how I'm utilizing the same tools that I just walked you through to profit. But look, son, this is Forever Slow Stroking the podcast. Just here to give you guidance and perspective. If you need me, son, just hit me. But for now, go. Oof. Yes, sir.